This is Johnny Seville from Acorn Wealth Corp. This is your executive summary for stock setups for Friday. Okay, the end of the week. Now, just really quickly, let's have a look at the S&P 500. The S&P 500 has obviously closed awesomely today in terms of the bears. Let's just go back to a cleaner chart here. So the S&P 500 has dropped. It hit its target, short-term target there, as you can see, and has just started to rally back up. I'm going to go to the SPY where we've got the drawings kind of already made here for us. So yeah, we've hit that target. We've rallied back up. We've rolled over today, and again on good volume. The volume up yesterday was 110 million. The day before was 118 million. The volume down today, 134 million. So basically 20% or more volume to the downside today than either of those previous two up days. So that's good. And as you can see, the volume down on those previous days was 214 million, 274 million. So the volume to the downside certainly overpowered the up volume, and that's why you can see the smart money indicator down the bottom, Twigs money flow, with that quite bearish sentiment. So that's what's going on in the SPY, and and what we're going to be looking for is what we call open range. And if you're brand new to Acorn, make sure you check out the open range lesson to learn what open range is all about in the customer portal. Or you can check your welcome package. You'll see that, hey, as a bonus for signing up, access your open range lesson by filling out your new customer survey, and then it'll automatically send you that lesson. So those are the ways you can go about getting that. For those of you who've been with us for a while, as we know, open range is very important. Open range was set on October 2nd. Excuse me, October 1st. You can see this candle up here, that little red candle. That's the first trading day of the month, and we looked at whether we closed lower or higher than that range. We closed lower than that range on October 4th, telling us the market was therefore going to go down. It's going to be a bearish bias. That stays valid until the third Friday. I should say that resets on the third Friday. So we've gone down this entire time. So the bearish signal worked again, and now we are going to get a new open range tomorrow. Tomorrow being options expiration Friday, we're going to look at the high and the low of the candle. And then next week, we're going to be looking to see whether we close above or below that range that we set tomorrow. That's going to give us a strong probability signal of whether we go up or down for the rest of the month. And then that'll reset again on the 1st of November and so forth. So right now, as you can see, it's certainly looking more bearish than it is bullish. The SPY, the support, as you can see here, is down at 262. So from a longer term perspective, that's where we're looking for support on the S&P. Now, in terms of some of the other indexes, you can see that essentially the Nasdaq. If you look at the Nasdaq, we've also got a similar pattern. So there, oops, wrong line. So there's our support line on the Nasdaq. You can see that that's basically rallied all the way up here. You've got an upward channel on the Nasdaq. We've touched one touch, two touch. This is the third touch. So this is the fourth time through. So there's a good probability that the Nasdaq could break down here. You can see that essentially the money flow has been going down as the Nasdaq's been going up. So if the Nasdaq, this is the Nasdaq 100, if that breaks down below 6,900, then we're looking at a potential drop on the Nasdaq down to this level, down to 6,100. Now, so the way that one could play that drop, if you wanted to play the indexes, and let's say you had an IRA or a fund where you couldn't go short, one way to go about that is to look at the SQQQs. So SQQQ is an ultra short on the Nasdaq. Or on the QQQs. So if we see that breakdown of the Nasdaq happen, you could buy SQQQQ, QQ. Anyway, you know what I'm talking about. That could be an opportunity if we break below that level. If you were wanting to get in earlier, obviously there's still you could buy the S triple Q here at these prices for a more aggressive earlier entry. So as you can see, that's the setup on SQQQ. Um, let's have a look. And that's basically the same thing you're looking at if you want to use the QQQs as a reference instead of the S&P, excuse me, instead of the Nasdaq. You know, you're looking at the same pattern here, but instead of a break below 6,900 or whatever it was, you'd be looking for a break below 167 on the QQQs as a possible entry point on that triple that ultra short I just showed you. Okay. So that's the Nasdaq. Dow Jones Transports, as we talked about this in trading room, but the Dow Jones Transports has got an upside down fallen angel pattern. So as you can see, the Dow Jones Transports are looking quite weak because this would indicate if it breaks through this resistance, 10,300, we'll turn it around the right way now. If it breaks below that 10,300 level, that's momentum to the downside. So again, you've got a lot of interesting things going on across the board in the market. So those are a couple of things to look at. Now, moving over to the longs, TROV. Obviously, which was an entry signal at 87 cents, has rallied beautifully. Now up to hit a high of $1.30 today. So obviously a 40% rally, which isn't bad at all. And pull back a little bit on the close. This is looking good. I talked about a stop signal of 87 cents, so or even just a little bit low that, maybe 83 cents. We've also got DERM, which is moving up nicely in this downward market. So DERM, as you can see, let me just go switch back to the traditional. There we go. You can see this is moving. If this breaks above 1350, could be a possible new entry signal for DERM. But it's holding its ground really well so far. Again, you could consider some partial profit taking. It's up about 20% from where we found it at. Okay, so that's great. BW has also been looking good. It's just kind of squeezed out of these moving average consolidation zone. Lots of insider buying as well on BW. And of course, you can see the fallen angel kind of pattern there and also there. It's got that kind of double the midline of the channel. So it's kind of in that zone at the moment, trying to power up. Volume was good yesterday, 913,000. Only sold off 500,000 today, so it's holding some strength. BW still looks good. CRMD. Let's have a quick look here. Okay. All right. So CRMD. Huge rally on this one. I took some profit at $1.50. It rallied all the way up to $2.40. It's been on a tear. As you can see, there's support coming up from the 20-day moving average, which it may bounce off of. Again, this has been I've been long this since 60 cents, 63 cents. I think the long entry we published to everyone else was at 30 cents. I just didn't have capital free at the time to jump into it. But either way, it's up huge. So it's a win no matter what. Again, we talked about some possible profit taking as it rallied up into 210, 220, 230, 240. So I took half my position out at $1.50, and I got the rest is riding at the moment. But keep your eye on that one still. On the short side, X. United States Steel Corp. This is looking. This is starting to drop. Still dropping. There's a few kind of. See if I can take some of this confusion off of the chart for you. As you can see, we've been dropping nicely. You've got across the system. You know, there's a little bit of support line there that we've kind of been bouncing along. All right, and it's and possible little head and shoulders forming over here on the right. So with X, you could certainly consider a partial profit take here if you wanted to take some off the table, and I'd consider lowering the stop signal to 31.13. On semiconductor, just free falling at the moment, just continuing to drop under the pressure of the moving averages. I'd consider lowering the stop signal to 1767 to just protect this beautiful drop it's had so far. SPPI. SPPI. This one's again looking like it's going to drop straight down to its support. As you can see, massive head and shoulders here on SPPI, so it's going to hit that core support if it gets down to around $11.50, $12. So again, I'd consider lowering the stop signal to 15.53 to protect that move so far. ATKR, obviously upside down fallen angel as well, and this is really kind of ramping up, moving nicely. ATKR, I'd consider lowering the stop signal to $25.13. Again, potential partial profit taking opportunity here if you haven't already taken profit along the way. It is at its 50% Fibonacci and some support from where this candle shot up. If you zoom into that, we'll zoom into that area. That's where the candle shot up from, right here, around $23. So there's going to be some support here, and it may bounce back up to say $24.50 or something. So again, you could, if you wanted to take some short-term profit, here's not a bad area for a partial profit take. HDS, this still looks great. I mean, if you're looking for a new short, obviously the short on the Nasdaq is one, but HDS, this is just still in fresh breakdown territory. Just broke down below its upward channel. We're looking at a target of $34 in that area. So HDS still looks good as a short for a possible stock to short here, and I'd consider lowering the stop to $41.13, and looking at that target around 34. GNTX. Also, just free falling. Again, another beautiful short. It's been dropping since September and peaked in June, like a lot of other stocks in the market. Again, this is looking great. Again, this is still shortable because it's as part of this large scale upward channel. We're still looking at a target down around 13.70, which is another $5 drop from where we're at, which is substantial. Obviously, we've liked this ever since it created a head and shoulders up at 24, but there's still probably much more downside left on this one. And so again, another opportunity you could still short if you're looking for something new. And this is looking great, GNTX. CMPR, this one's of course dropping nicely. I would consider lowering the stop signal on this one to 37.33. Well, that's not right. 127.54. Sorry, 127.54 to protect that drop that it's already had. We've also got cores, as in Michael Kors. This is, again, a lovely upward channel breakdown. This is why patterns are just so valuable. You know, patterns and probabilities, they just tell you what's most likely to happen. You know, I mean, you don't need a crystal ball. You just need to know what the pattern is, and that tells you what's likely going to happen. Upward channel tells you it's likely to break down after the third touch, 1, 2, 3, and again that $58 target's in sight. Could go a lot further. If it breaks below 57, there's going to be some heavy selling pressure on that. So I'd consider lowering the stop to protect the move so far down to 66.13. CMCO, again, beautiful upward channel breakdown. It's let's just get a bit more perspective on that. There you go. That's still falling. It's the target of $29. So again, still another $5, $6 this could drop. So still a valid shortable opportunity. I'd consider lowering the stop to 37.33. TRTN, also still very much so a shortable opportunity. It hasn't started running away on us yet. If this breaks down below $30, you can see that support here at $30. If it breaks below 30, still looks good as a new short, something you could short. and for a drop all the way down to $23. So it's a $7 drop. Um, and there's one long that we talked about. Now this is highly speculative. It's a very cheap stock. It's down at 32 cents. We talked about it in Trading Room on Tuesday as something I liked, and it's a perfect opportunity to enter yesterday. Traded 9 million shares yesterday, 46 million shares today, up 33%. And if you have a look at again, the pattern is a fallen angel, so that's excellent. And then if you look at the insiders, TTNP, yeah, you know me. There we go. There's those triple digits that I love. Heavy accumulation from multiple directors. So that looks quite good. Um, so 25 cents. The things taking off. It's pushing nicely higher and higher, and so this could be a longer term. This could be a longer term play as you start to look at the potential. It's come all the way down from $8. It's at 32 cents. So this is highly speculative because I mean I would be looking at putting a stop loss basically kind of down around 15 cents. So I'm risking 50% here, but if it gets up to $3, that's 1,000% reward. So you're getting 20 times what you're risking. If it gets up to higher, the multiples continue. So in a trade setup like this, you basically say, well, how much am I willing to lose? If I lost 50%, you've got to be okay with that. But again, so you might not put much money into it, but if it pays off, you don't need to put much in to be really happy with 1,000 to 2,000% return. So this is a longer term play, highly speculative. So beware, but it does have some criteria that gives it the potential for something exciting maybe going on. So there you go. That's your summary for stock setups for Friday. I'll be flying back to Canada on Monday, so we'll be back from this beautiful, warm Australian weather back into the cold of Calgary. So have a wonderful weekend, and we'll see you on the other side of it. Take care and happy trading.